Go across to Mr. Khaitan. He is, we're focusing on Eveready Industries. Amritanshu Khaitan, MD of Eveready Industries, joins us from Kolkata. Thank you so much for joining us, Mr. Khaitan. Congratulations, the numbers have been good. We're coming to you on the overall industry outlook. Now, Eveready is clearly the market leader, 50% in dry cells, 75% in flashlights. I'm going to start off by asking you a little bit about what is your outlook in terms of demand for this current year, and if you could break it up for us in terms of the three key dry cells categories, D, AA, AAA. Where do you see maximum demand growing?
Yes, good morning. The battery industry is looking at a very stable growing year this year. If you see the three categories, D size has been historically declining in the last 5-6 years, and we see that trend slowing down, and I think this year the decline should be around 5 to 10%.
Okay.
The AA category, which is 70% of the market, is seeing a 4 to 5% growth. And the new age category, which is a AAA battery, is having a high double-digit 15 to 20% growth, and this is being fueled by the digitization taking place because additional set-top boxes in homes is generating an additional remote in every household, thereby creating additional demand for 4 batteries a year.
So this is all in the AAA space, right?
Yes, AAA and some places AA.
And AAA is also being used in toys and other smaller gadgets where the usage is slightly higher?
That is a fact, yes.
So in terms of your own breakup of margins, where do you have the maximum margins in these three categories? In Eveready, or I would say for the whole industry, the segments are divided more as a premium category and a popular category for all three segments. And the margins are very similar for the premium category across the products as well as for the popular category. You'd been facing a bit of a problem in terms of rupee weakening. Last year, input costs had gone up. Could you give us a sense of how your input costs would be affected as the rupee strengthens? The price increases we've taken have actually covered us for the current rupee-dollar parity. And if the rupee appreciates, we should gain for every rupee about 5 to 6 crores on the bottom line. Okay.
The other key raw material for us is zinc, which has been hardening. So the rupee appreciation is being offset by the depreciating zinc, which is about 15% of our cost basket.
So you're saying that because of higher commodity zinc prices, it's affecting, even though rupee has strengthened, your margins are unlikely to go up, net margins, because of hardening zinc?
The margins have already gone up from a level of around 8%. Last year we are clocking around 10%.
All right.
I think for the year we should remain between the 9 to 10% mark. Especially for Eveready, we are plowing a decent amount of the increased realizations onto brand building. So that's why part of the margin expansion is not being seen.
So you were, just as an aside, brand building, you're going to stick to Akshay Kumar? Is he still on?
As of now, he's our brand ambassador.
All right. Just want to get into the flashlights space as well. You have a massive kind of market share in flashlights, especially the new LED flashlights. Is there a limited growth prospect there now?
The flashlight industry has been growing at 8 to 10% CAGR in the last 10 years. The current year, the market demand is a bit sluggish due to the monsoons being erratic across the country. But I think that is more a single year phenomenon. I feel that the category is still very under-owned in the country, and as the GDP picks up and the economy grows, I think demand for the category should continue growing.
Would you are you finding any kind of competition coming from cheaper imports in the flashlight space?
It's not so much imports. You have lot of Me Too type of flashlights which are there in the market. So when you look at Eveready's market share being 75%, that is of 60% of the organized market. There is a large 40% unorganized category which is there today.
So and these are basically
but in the overall point for the company, it is a positive because that 40% unorganized category is also really made the category grow very fast, and it's consuming batteries. So as a company, we actually have gained with the unorganized sector actually coming in.
You'd spoken about an anti-dumping duty on that AA space, right? Has that been renewed?
The anti-dumping duty has expired about a year back, about 8-9 months back, and we are in the process as an industry to refile it, and then it's for the government actually to see if they continue giving us the anti-dumping benefit, because in the end the battery category is consumed by the poorest of poor in the country, and cheap Chinese batteries coming at very, very low prices are actually more harmful rather than beneficial, because they go and spoil the products as well, which use the batteries.
But you're saying that people are...
we are hopeful the government should.
You know, in the past you've said that these cheap batteries have been around for a long time, and there was a sampling that took place. The poorer people tended to sample them, and then now they've moved on because of the poor quality. They've now moved back to the branded or the Me Too segment. But is there a danger that the anti-dumping removal has again led to a higher sampling?
You see, with the anti-dumping not being there, it is still about 5% of the total market. You still have 300 million people below the poverty line. So when they come up into purchasing power, then automatically they get tempted to buy these cheap products. So I think India as a market is large enough for cheap Chinese batteries to remain. But we as an industry are hopeful that the government will look into this, because it is basically being dumped at prices which is below even the raw material costs. So I think that's not fair for the battery industry.
Okay, I'm going to pick out one line from your annual report, and it says that given the overall positive scenario, a tangible threat to battery consumption lies in making the product unaffordable to poorer segments of the economy. This trend has been witnessed in the recent past. Could you explain what you mean by that? Unaffordable to the poorer segments of the economy, and this trend has been witnessed in the recent past?
What we are trying to say is that a few years ago, when the D-size battery prices had to be increased very dramatically, with technology shift happening in flashlights, the demand for batteries did come down in that category. So we feel that though our price increases in percentage terms have been large, but in absolute terms it is still very affordable. But it's not that we can just keep on passing on price increases. So from that angle, I think this cautionary statement was there in the annual report.
So you do feel that there is now a limit to your pricing power?
No, I think the pricing power has no limit, in the sense that the last 3 rounds of price increase we took, the industry players have also followed us, because in the end the industry was making very low margins. When you look at the quantum of price increase, it's been a 50 paisa to a rupee kind of price increase, which in today's day and age is a very low amount. What I think we are trying to say is that you can't expect a 15-20% kind of price increase annually, but a 5% kind of price increase annually is something which we are quite confident we should be able to do.
And that price increase is not going to lead to people moving to cheaper batteries, the Me Too segment, the cheaper imported ones?
I don't think so. If you see, the cheap battery is still available today at 1/10 the price, and that is about 5% of the market. So I think people can differentiate between what's a quality product and what is a rubbish battery.
As a long-term guidance, do you think that the batteries, as we know, this current technology is going to continue? Because in many countries now, new kinds of ways of storing power is coming in. is that going to be out of reach for Indian consumers in the immediate medium term?
If you see the US market, or if you even see China or other developed markets, the per capita consumption of batteries is much higher than what it is in India. And they are still using the same batteries. So I really don't see a major threat to the current categories. But yes, I would say more than the future, I would say the present is looking actually brighter for us, because per capita consumption in India is one of the lowest in the world. So if we even look at China, they are same kind of population consuming 3 times the number of batteries we do.
So
I
what
think
kind
there's
of
a lot
growth
of
do you
legs
see in
left
terms
for the
of
category.
CAGR terms over the next 2 to 3 years? What are the growth that you're kind of working internally?
Internally, if D size stabilizes with and it becomes small, I think AAA should carry on high double digit, and AA battery should grow between 5 to 10%.
AA should grow between, and AAA you're saying in double digit. And what is the kind of
high double digit, yeah.
what you did mention that rupee strengthening makes a significant difference to your bottom line, 5 to 6 crores per rupee drop. Any guidance that you can give us in terms of earnings growth?
You see, Eveready's balance sheet has been consistently delevered in the last 18 months.
Yeah.
And that will be reflecting in our quarterly numbers, with interest costs coming down and operating profits going up. So I personally think we should be looking at a 30-35% kind of EBITDA growth, and that should flow down to the bottom line very handsomely.
Okay, that's interesting. Thank you so much for joining us, sir. Pleasure having you on the show.
Thank you.